All right, hey there, guys. Sam here. I'm back with another in this series where we're kind of emphasizing what I'm calling the underappreciated indicators in our portfolio. And now I've done some videos on this idea in the last month here, and I've refined this a bit here. I've added a little bit to it, and I think this will be, well, my proposition to you is if you will trade this as I'm going to show it to you and do the back testing exactly as I'm doing it, I think you're going to find some very good success in the markets. And for those of you that are working in prop accounts, which apparently all of you are, I think you're going to find if you do this with the discipline I'm going to show you here, you're going to have no trouble passing as many prop challenges and getting funded as much as you'd like. Now that's a bold statement here, so I can show it to you. The only way you're going to build that conviction is if you do the same back testing that I'm going to do here. And now in this kind of back testing, I won't call it a perfect science because I'm going to use the manual back tester. So really, when you're doing this, as I'm going to encourage you to do, to build the conviction to get comfortable trading this, there is some subjectivity here. So my suggestion to you, and you'll see this as we go through it, you want to be very disciplined and very unforgiving. You know yourself, you know how you react to stress in the market. So we're going to try and be as objective as possible, as I possibly can, with a manual backtest. And I'm doing it that way. Many of you know the backtesting, the replay in Ninja is very unforgiving and very annoying and tedious to work with. So I'm going to do it this way here, but I do think we can accomplish the objective here, which is to show you something I'm fairly certain a small percentage of you are trading. Those of you that may have looked at this and thought, I don't know, and moved on, right? This would be particularly, I think, beneficial to those of you that are struggling with your prop accounts. Okay, so that said, now what I've got here, I've got a 60-minute chart of the ES. Now, I'm going to focus on two of our indicators, our volume profile indicator and our auto trend line indicator. And we're going to look at how the two can work together and create kind of a map of the market. And I think when we get the trend lines on, I think you're going to see an X-ray vision of the markets that only the algos see, right? You're going to get a chance to see it here, and I think it will be very eye-opening. Okay, so let's get right to it. So I've got 30 days of data here on a 60-minute in the ES. I have our volume profile on, of course, in our toolbar, as I always do here. Now, what I'm going to do here, again, I've got the volume profile on. It's set to weekly. I'm looking at the weekly only. But what I want to do with this is I want to take advantage of one of the unique features of our volume profile, and that's the auto splitting. So I'm going to turn this on, and that's going to take a minute to reset. And what you'll notice what it's doing here is it's breaking up the elongated or the volume profiles where we might have a double distribution or even a triple distribution. So it's trying to isolate. Well, let me rephrase that. It's trying to expand those areas where we might have something where you've got a value area in one location, then another in the second, where you might have that double distribution. You can see kind of an example of it here. That might have had a very different look without the split. But that's kind of beside the point. What it's trying to do is give you the best representation of volume profiles. This is going to include the overnight, of course, and give you very clear ideas about where the volume is located. All right, so that's kind of a mouthful. But having said all of that, what I've done here, again, this is unique to our indicator. I want it to show me the high volume nodes. I'm asking it to show me only one. All I want to see is the point of control. I'm giving it a little cushion here on the range. Let's make it a 2-tick range for those high volume nodes, and I'm asking it to extend forward. Well, here. Right, I'd already done it, right? So we've extended these forward here. This count, right, can go up to 50, depends on how much data you're looking at. But now, so there we have it. Now, what we're going to do here, because I can't translate this or transfer. I can't go from a 60-minute with all these points of control and then go down to a 5-minute. It's going to change it. So the way that I can do this here is, if I back up a little bit, I'm going to use the horizontal. What do we call this? The range tool. And I'm going to use that to highlight and draw on the chart where all the points of control are on the weekly splits And then when I'm going to have it set so that it will put them on every ES chart that I open or that we look at. And then I don't need to worry about this. So let me, probably be easier to show it to you. So I'm just going to do these one at a time. I just do a couple here. And then I'm going to pause the video here so you don't have to sit through all of this, right? We don't want them to be too big because remember, we're going to go down to a 1 minute chart, and something that you're drawing on a 60 minute, if you make it too fat, right, it's going to be perhaps wider than you would want here. So you get the idea here. I'm just going through and I'm just highlighting anywhere where I see these little, I guess we're calling them brown, I think it's orange, but it's only at a 20 or 30% opacity. Anywhere I see one of these, I'm just going to highlight it like this, right? So I'm getting all of these. Now let me pause the video here so you don't have to sit through all of this here, and I'll be back. We'll have this all done. Okay, here. So now you see what's all done. I should note here, I'm pulling from our toolbar, but if you were, it's the what do they call it? The region highlight Y. Or they give you a little hotkey, Shift F2. That's what it is here. I'm just pulling it here. I just know it by the icon there. But that beside the point, right? So I just wanted to be sure you were aware of what I was using. I wasn't just pulling. It's not unique to our toolbar. Now, you'll note here, there's a few spots where they're right on top of each other, where you can just widen the range a little bit. Again, because you're drawing on a 60 minute. We go down to 1 minute. These are going to look much larger. But you'll note here, I've got everything covered. Every one of those POCs is covered. And again, these are all split volume profiles. So anywhere where there's volume, where we have that, you know, the point of control, where we see the most volume here, has now been accounted for. So with that, now what I'm going to do is I'm going to take it off. So if we look at this here, you find that, okay, well, you know, it's not always tick to tick here, but what I'm identifying in those areas where the market is going to, there's going to be resistance here. It's going to be heavier, think of it that way, right? The volume is thicker here. Where there's opportunity is where we have gaps between them, and we're going to kind of try and use these two indicators together and see if we can identify those areas where there's the best opportunity, where we don't have. So here, right, this is going to be a little bit choppy here, and you can just see it from the price action because of all the points of control that have overlapped here. And now this, we're on Friday, of course, we went to new all-time highs. That ends up being the point of control up here, the weekly point of control. So, you know, it's kind of a map of the market here. Now you can look at that and go, okay, well, great. What do I do with that? Well, that's what we're going to talk about here. So let me now that we have this drawn, and one more thing I assume you guys know this here. When you're drawing these, you want to attach these. You want to be sure that you have it set to attach to all charts. So if I open up a chart as I'm about to on the 1 minute chart, all of these lines are going to be there, right? Just to be sure, right? I don't want to assume that you know that. But so there we go. That's how you're going to do it. Now with that done, I don't need the volume profile on. I mean, I can put it on, but I don't need it on, right? Because I've mapped the market to what I'm looking for already. So with that said, now let's go over and take a look at a 1 minute chart with all of these on it, and then we'll start digging into the trade entries. So stand by. Okay, now I've got a 1 minute ES chart up. We're going back to Monday morning, the 20th of October, and we're just going to do the most recent week, right? There's no need to cherry pick data, right? I never do. I always just use the most recent week of data. So you can see here, so if I just put this little line here so you can see it. So there's 10/20, that's Monday morning of this past week. Okay, so let's get this off of here, and let's get that off here. Now, I have on the chart our initial balance indicator with the opening range, the 15-minute opening range highlighted. Again, I've done some content on this recently. This is a very, very popular approach to trading the market, the opening range breakout or fade. So this is somewhat new in the context of videos I've done previously here. It was always there. It's just now I'm highlighting it. Again, it's very popular. Careful, it's not something to take blindly. You see here the first test here failed. So again, as I mentioned when I did that video, this is so popular, you know, institutions, algos are well aware of it, right? So it's often now become something to consider fading, much like the first test of the IB, the Madonna trade here, but not to digress. Okay, so here's what else is on the chart. I have a 20 period volume weighted moving average put into the Gann high low. Well, let me show you that to you. Let me open this up. So here you see it. Now, with our Gann high-low, you've got a whole lot of choices here of the type of moving average you want to use. I've done a lot of videos here and a lot of work with the EMA. I did some back testing with Algo Studio Pro and found the volume-weighted moving average had excellent results. So just for a little there's no magic in any one of these here. It's more the consistency of how you approach it. But this had very good numbers, so I'm going to use a volume weighted moving average, 20 period. The smoothing period is a 9, and we're going to highlight the squeezes with the yellow dots. So with that, you'll see here what I've got on the chart here. There's nothing but our tools. Now below, I do have our volume indicator and our cum delta indicator. These are not requirements for this little test or this scenario that we're going to do here. You could use native Ninja volume. You could use, you could use somebody else's cum delta. If you have the order flow package, you could use the native Ninja cum delta. I'm going to use ours. Of course, I prefer it because I like the Bollinger Bands around it. Right? You'll find it's very consistent. Right? I find it useful, so that's why I'm putting on here. These are not required to what we're doing, although they're not going to hurt. Okay, so here we are on Monday morning. Now here's the criteria for the trades. Now I haven't even put our auto trend lines on here, which we're going to use for our trades. But having said that, having done what we just did, let me reset this here. It's kind of interesting to see how these levels. If I can squeeze this all up here, so you can take a look at how the market responds to these levels. Right, this is, I think you'll find quite interesting how they respond. Now, it's not always, here, tick, 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 right, very good, right, you're going to get movement to and through. Remember, these are ranges based on the POC, so there's a bit of forgiveness here, but you'll find that they're unbelievably effective in terms of potential support and resistance. But it's not, oh, we hit a level, I better sell it. These are areas where the market might struggle a bit to get through because we know there's a lot of volume being traded there. So that's often where institutions are getting into the market because they can bury their size and not disrupt the market as much. You see, I mean, this is even Friday going right up to a prior. Right. So, I mean, these can be very effective here, but not to digress. This is not essential to what we're going to backtest here, but I think you will find as we go through this very useful. And again, my goal here is to encourage you to do this backtest yourself. Exactly what I'm doing here. You could download all of these indicators for a 7-day free trial if you don't own any of them already. Many of you may already own the volume profile indicator or the cum delta. Some of you may already own the auto trend lines here, which is where we're headed. As well as the initial balance, right? So again, these are not requirements. I'm just going to show you this is how I've been working with it, and I think you're going to like the results. Okay, so that said, with these levels, now that we understand what these levels are and looking how the market responds to them, let's go back to Monday morning here. Let me open this up and we'll get started. Okay, now I've opened this up a little bit. Now here's the criteria for entry. We're going to work on breaks of trend lines, but we are not going to take a trade in the middle if there's a squeeze going on. Squeeze being the yellow dots, right? And you'd be surprised if you don't track it, which I would encourage you to consider doing. You'd be, I think, surprised at how often the market is in a squeeze, right? Just a contraction of volatility. We all understand how the market likes to move. I think this would be a bit redundant here, but just we have. In auction market theory here, we've got expansion, then often we contract here, and then we're either coming back down to find a new area of value, and then we might go up and find a new area up here. This is how the market likes to move. It's contraction, expansion, contraction, expansion, and that's often what we're doing with volume profile, is just looking for where has the market found new value as we go through price discovery. So as we expand into a new level here, do we hold value here? And often what you see here with a squeeze like this, it often happens right on the IB high or the IB low, because that's where algos get active. So it's very common to see the market push right from the open, we saw this multiple times this week, push and then just range, right? We call it riding the rail of the IB high, where it'll just sit in a squeeze for, it can be hours, and then maybe there's one other push here for price discovery to see if we can find a new range, or we retrace back in to find go back to a prior area of support. That's the theory behind it, and I think you'll find it's quite consistent, particularly in the S&P, right? So here we come out of the gate here, a little squeeze right at the opening range, the opening range high here, we squeeze, and then we get a push, right? Now, what you'll note here is we're starting to go into some of these high volume areas here that we marked off on our 60-minute chart. So it's interesting to see how the market responds to these levels, because we know very high volume was traded there previously. Now here we ride the rail here. Here's the IB high right here. We ride that rail, and eventually we push up here and try and establish a new level of value here. I'm just going to go through, we're not even getting to the trades yet, but I just want you to see how consistent that is. It's if you're not paying attention to it, it can try to trade in here is guaranteed money lost. Almost guarantee it. Unless you're a hyper scalper and you're working off the dome and you've got 3 tick targets, because nothing follows through here. So this is and note the high volume range right here that we're stuck in until we break out of it, and then we're back to retest. Okay, let's get to the actual trading here. Okay, right, it's easy to get distracted. Okay, so what I'm going to do is I'm going to turn on the auto trend lines. Now, of course, you don't see anything yet, because the key to this whole program is the way I have this set. So we're going to use, this is the default, and there's no particular magic in 10, the strength, right? So 10 on either side to create a trend line. But the minimum number of touches here, I've done some big back and forth testing with this. I think 3 is probably what I would recommend to you. So a minimum of 3 touches to define the trend line. Thereby, if we're going to look at a break of a trend line, we know it's breaking a trend line that had 3 touches. So it's more significant. So let me put these on, because this is where you're going to get an X-ray look at what the algos are seeing in the market. Now, I'll let you make your own determination as to whether or not you think algos are responding here. I'll let you, do your own back testing. I'm just going to show it to you. So I'm going to propose to you that this is what the algos, this is an X-ray of the market. This is what the algos are seeing, right? And when we go through this, I think you're going to find that that's very hard to dispute. So the entry criteria here, as I said, we're going to take not where the trend line is defended. We're only going to trade breaks. And we're only going to trade where we have enough distance from one trend line to the next, because what you'll find is very, very consistent. Here's a couple of good examples of it. When the market breaks one trend line, it'll invariably fall to the next trend line. If it breaks that one, it'll go to the next one. Breaks that one, it'll go to the next one. And you see this over and over again. So here's a break, we go to the next one. Here's a break, we go to the next one. So this would be an example here where the break, there's not enough distance here. Not only, I know we're towards the end of the day, but not only is there not enough difference here, you're at these high volume nodes here. So that's an area where you might anticipate either support, or if it gets through, some resistance, because we know that's a very high volume area. So here, okay, probably, this is the advantage of something like this in our toolbar, to look and say, okay, well, how much do I have? 15 ticks there to the next trend line, 21 ticks to the next trend line. Is that enough? Probably enough for a trade. We're going to use a criteria here of a 2-to-1 with a 16 tick stop. So we're going to risk 200 to make 400. So I'm going to use a 1632 for a target, and there's going to be spots where we're not going to make the 32 tick target, and then the market coming back. I'm going to use if it crosses over the Gann high low, that will be an exit. Or if there's a very obvious reaction that, if you were watching the trade here, you're not going to sit through and give 30 ticks back and take a full loser on. So some discretion here. Again, I'm going to encourage you to do this back test yourself. That's the only way you'll build the conviction to actually take these trades, is if you do it yourself. You can't watch me do it and then go trade this. You've got to do this yourself. Again, manual back tester, download it for 7 days, back test to your heart's content. I will say I find this to be most effective on the ES. Yes, I have tested it on the MNQ and the NQ. It's better on the NQ, but the risk is so high and the volatility so high in the NQ. If you wanted to test this on the MNQ, I'd suggest maybe you're working with 5 lots on the assumption that the majority of you are working with a 50K prop account with a $2,500 drawdown. Again, not to digress more than I already have, but I would encourage you to work with prop firms that have an end of day drawdown rather than a trailing, right? It's very tempting to go over to Apex because they literally give it away. I don't know, $20, $30, $40 for a 50K, but it's a trailing drawdown, right? That's what bites you in the ass. So you're going to pay more for the end of day drawdowns, but I think you're going to have a much better result. We will have a link underneath this video on one that we've been working with that we're happy with, and of course it's in our Discord as well. Okay, back to the case at hand. 19 minutes in, I'm still explaining, right? So if you're still watching and you didn't get bored and like, oh God, this guy talks too much, let's get right to it. Okay, so here we go. Remember, we're not going to enter if there's a squeeze going on. Now, you'll note here, whenever I see a triangle, that means I have a break. I've broken the trend line. If I have stars, that means the trend line is held. So here on Monday morning, coming right out of the chute, well, there's no downsloping trend line here on the 1 minute here from the prior day that would be consistent with anything we'd see at the open, right? So there's nothing to trade short in term. Pardon me. There's no break of a trend line taking us higher that I have to use for entry. The first trade I get right here, where I see the triangle, well, I don't want to take that because look where the next trend line is. And the next trend line, I don't have enough room here. And that's key to this. You've got to look for that distance. In the same way we're looking for distance between the high volume nodes, I'm looking for distance between trend lines. Because again, you'll find it will drop from one, go to the next, go to the next, go to the next, go to the next. And it's just insanely consistent, right? There's no way that's not being controlled by algorithms. Okay, so do I have a trade here? Well, I have nothing here. I have, I wouldn't take that, right? I mean, you just don't have enough room here. Again, I'm trying to be very, very objective in what we're looking at here. There's nothing, now I go into a bunch of squeeze, right? So we had the launch. We had the launch from the open Monday morning, up we go, and now we're just going sideways, and we're stuck between these two high volume nodes, and it would probably not be surprising, we get a bunch of squeeze here, right? So this is untradeable activity. It's also, if we look here, this is about the lunch hour here, and it's only coming out, it's about 1 o'clock here. We go to, here's 1 o'clock. Coming out of the lunch hour, do we start to get some traction? So we now break out of this high volume node here. Is there a trade here? Well, there's a trade right here. So do you see this? This is the trend line. I'm assuming you guys can see this right here. I've fattened these up here, so you. Oh, I didn't get that one. I've fattened these up on the hope that you'll see these here. That's why I wouldn't necessarily leave them this way, but for the video here, I fatten these up. So here's the trend line that we're breaking. Now I know it's consistent. I know it's significant here because that's the 6th time that it's tapped that trend line here. I got 1, 2, 3, 4, 5, 6. Now I'm breaking that. Okay, so let's get down to it. Okay, here we go. So this is the first trade here. I'm going to take now. Because the break will only show at the close of the bar, so I need a close beyond the trend line here. We're going to enter at the close of the bar. So there's the first entry. You can see my $200 stop, 16 tick stop on this one lot here, and we're going for 32 ticks. Now, is there anything here that would suggest I'm not going to make it here? Well, I get it right on the first. There's 33. There's 32. Okay, so there's the first trade. I go boom. I go right up 32. Okay, now I'm going to look here. Do I get another trade here? Here, well, do I want this trade? No, there's not enough room, and I'm in a squeeze. Do I want this trade? Yes, I'm going to use the Gann high low here as kind of a reference for trend. Now I've got the distance here. Do you see from this trend line to this high volume area and the next trend line, which by the way, where does it fall? Right to the trend line. Is there enough room? Well, I would quickly, I'll do this often. How much room do I have there? There's 17, there's 24 tradable. Okay, we've only had one trade so far. So yeah, I'd probably take that trade. So let's go ahead and go with it. Let's take a short here. I've got these just hotkeyed. So here's the close of the candle, and I'm going to go right to the trend line here where I start. Now, you can look at this and say, well, what if it breaks the trend line? But look how many times it's testing that trend line. It's not breaking the trend line. So I'm going to use here the close beyond the Gann high low, the volume weighted moving average here as my exit. I'm going to assume a lousy fill. Right, and that's what I mean by there's some subjectivity here in terms of a back test here. You've got to be honest with yourself, right? So I mean, yeah, you could put it down here and get a better result, but are you gonna clear it here? I mean, you do have the high volume node here, right? As we marked out earlier, but it's just human nature to think, oh, maybe it'll break, oh, maybe it'll break. Okay, so again, let's not be forgiving and accommodating to a better result. Let's be realistic, right? Only you know how you would react there. I'm going to just assume, again, being as objective as I can, if I cross back over the Gann high low, I'm going to exit the trade. Okay, up here, do I want to do anything? Now, keep in mind that a trend line holding is a potential entry, right? Should we break the other way? But we're not going to take those. We're only going to take the breaks. Now, we get a break here. Enough room? No, obviously. There's a bunch of trend lines here. What do we do? After we break this one, boom, boom, boom. All right, we hit this one. Anything here? A break to the upside? Well, that's 5 minutes before the close. And is there any room? Again, same idea. If we break this one, we're going to run into these up here. And we're at the close of the close of the cash session. You going to take that trade? Probably not. I mean, here would have been a winner, but that's right at the close, right? I'm not going to take that. I wouldn't take that, right? So I'm not going to include that. So far, day one, I've had total of 2 trades, and I'm sitting at 529. Win ratio 100%. No losers, just 2 winners. Now, for many of you, I struggle with this as well. 2 trades? Right? For those of you that are going bell to bell, and some of you are not, that might frustrate you. So it might be tempting to take more trades. I'm telling you here, fewer trades almost always going to be a better result for you if you maintain that discipline. So when you're doing the back test here, yes, that means you had to sit through all of this. No trades, no trades, no trades. Would you have wanted to trade it anyway? Right? You kind of got to ask yourself that, right? I understand only 2 trades, but you got 525 on the day. Of course, that's also all of this includes fees. Okay, let's go to the next day here. I'm going to try and move us a little faster here. Let me pause here so you don't have to watch me scroll. Okay, the next day, here's the cash open, right? You can see our opening range breakout indicator. Opening range is being highlighted, and the initial balance is being highlighted here with the red and the red line here. So coming out of the chute, do I have a trade? Well, this is the first couple of minutes here. There's a squeeze here. Trend lines are holding here. So no, I don't have one. I haven't really even referenced down here, but this is always, at a glance, something to consider. Do I get a trade here? Well, yes, I do. And I have some distance. Now, there's a bit of a judgment call here in that we're heading down towards the opening range low, the 15-minute opening range low. But you see what's happening here? It's breaking, but they're not closing below. So this is actually a hold until I get this final one here. Let me open this up so you can see that a little bit better. Right, the stars mean we did not get a close below. In other words, the trend line held. It's only on this bar when I close below that I get a valid entry for this back test, the way that I'm encouraging you to do a similar back test. So I'm going to take a short here, and I'm going to enter at the close of this bar, right? So there's my stop up here. It gets close, right? It almost gets it right here. I don't get it. Remember, I'm after 32 ticks. I've got another trend line down here. Look, there it is right there, right? Just before I hit this trend line. Here's the stop. Almost got it right here. Almost, right? It looks like it's a tick off of it. That's why you don't panic there. Just, once you enter the trade, just hold the stop. There we get our target. Okay, now we're going to just carry on here. Anything else here, right? Do I want to take these trades here? Well, I don't want to take this. I've got another trend line here. I don't want to take this one. I've got another trend line here. That would be the 4th tap of that, right? So I know it's a little hard to see there, but there's the 4th tap of that trend line. So this is not one you would want to take because there's not enough room. Now, if it were to clear that one and go, as it does over here, different story. Okay, now we're going to look here. No, we'll come down here. I got new trend lines forming down here. Okay, up here. Now I come over here. Now that's the first test of the IB high. Now this is a very aggressive candle here, and we're breaking a trend line. Thus the triangle here. Look at the cum delta. Very aggressive buyers here. The volume is good here. So yes, we are going to take that trade on the assumption that we're making this is a combination of both the opening range breakout as well as the initial balance breakout. So let's go ahead and take that. So I'm going to hit F11, which is I have these hotkeyed. Let's not assume a great fill. Let's assume a shitty fill. And I'm going to go, what do I get here? 28, 29, 31 ticks. 32 right there. Okay, so I've got that. Stop was never threatened here until we come down. Where does it go? It goes to this trend line. I think you have to see this on your own charts here to see how it's almost mind-blowing how consistent this is. Okay, so I got 1, 2, 3, 4, 5, 6, 7, 8, 10 times they hit that trend line. They can't break it. Now, note, we're also in a squeeze. So no trade. No trade. Now, I do get a signal here, but there's no trade because I'm still in a squeeze, right? That's the discipline I'm going to encourage you to maintain. I would encourage you to maintain that in your trading as well as your back testing here. Is there anything I get up here, anything I want? Well, note here, I'm also at a high volume node, so a prior POC. I don't know what that POC is from. I don't need to know. I just know that there was a lot of volume there because it's marked on my chart. Nothing. Oh, this is tricky, right? So it's this bar here that comes out of the squeeze, right? So we're tapping. Note what's happening here. We're tapping the upper edge of that high volume range, that node here that we wicked off on the weekly chart, and as we come down, we break it. Now I'm going to assume a bad fill here because that's not going to show that triangle here until the close of the bar, because if you can see it, we're breaking. This is the last trend line we're breaking. Now, where's the next trend line? Right down here. You see it right here, right? This one. So what you're anticipating here, and I can visually identify, I have room. I have room to the next trend line, and I have room from the high volume node to the next high volume node. So let's tee that up because that's absolutely one you're going to want to trade, right? But let's assume that the worst possible fill at the low of the bar, right? Now there's my $200 stop, and I'm after 32 ticks. Well, where did I get it? Right there, right at the next volume node. Right. There we got it. Okay, so we got that one. That's good here. Now anything here? No, I'm not doing anything here. Anything here? Anything here? Anything here? Yes. Okay, so no, pardon me. There's a squeeze, so there's nothing there. Squeeze here, nothing there. Not enough room here. I want to be sure that you're cognizant of what I'm talking about there. You see the upslope trend line here. There's not enough room here, and I'm coming right back to the opening range high. Potential. It's also the IB high. It's potential support. This is the market doing that same thing. We're riding the rail of the IB high. Here, again, right? We're right in the middle of a squeeze. We've got this downsloping trend line here. We're not considering any trades that would be the trend line holding. We're only looking at breaks. Here's a triangle. It's a break, but we're in a squeeze. Nothing. Here's a break, but we're in a squeeze. Here's a break. Let's go ahead and let's take that here to be consistent. Well, let's check that. What's the distance to the trend line, right? So here's the break to that one. I've got 12 ticks, not enough. So we're not going to take that one. We need 32 ticks. There's not enough room there. Now, this would be a judgment call. I would not take this, right? That's the last couple of minutes of the day. No, right? That's not a good place to be trading. That's it. 1 minute to 4 o'clock to the close. Yes, it ends up being a big winner here. It breaks one trend line, breaks the next. Where does it fall? To the upsloping trend lines here. Now, let's review where we are so far. Okay, so we've had a total of 5 trades. We've had. Oh, Jesus, we are. We got a 100% win rate. 1717 is our net profit after fees, right? Average win has been 343. We have no losers as of yet. Just per the criteria that I'm using here. Now, you might think, oh, come on, man, you're doing this for the video. Blah, blah. I'm strongly encouraging you to do the same thing, to do the same back test. And see if you get different results. Now let me get. I won't scroll here, so let me get over to the next day. Okay, just so you see it here. So now it's 10:22. So this is Wednesday. There's the open of the market on Wednesday. Right? Just confirming. I just want to be sure that you don't think I'm cherry picking where we are here. So it's a little. You can't tell right here down here. So that's why I do that data box here. So here's the start of trading on Wednesday. Now that's the opening 1 minute candle. Are we breaking a trend line? Yes. I'm not going to include that because that's not a trade I would take. Right? I don't want to trade in the opening 1 minute. Massive winner. I mean, some of you might take that, but right, I wouldn't, so I'm not going to include it. Now I get down here, I get another break, but look where I am. I'm at a high volume node, and there's another trend line down here. I don't have enough room. So I'm not going to take that one. Now we go into a squeeze, right? Again, it's not uncommon. We get a big move, and the market's going to digest it. Look at all the downsloping trend line here. This is what I mean by saying you're getting an x-ray of the market, right? Because the algos are tracking all of that. Now, okay, right? So we're in a squeeze, Oh, here's the break here. So here, now look what I've got here. I've got massive amounts of room here. I can't even see. Here, this is how far I have to go to the next high volume node. So yeah, this is a trade we want. Right, so here's the break of the trend line here as we break the opening range, right? So here's that's why this trade is very popular, right? It's not there every day, and there are many days where you're going to get just face planted, but because the algos will reject it. But here, this is a particularly good one. So let's go ahead and take that one. So that's a short. We're going to assume the worst possible fill, which would be the close of the bar. We can see where the Gann high low is. We've got plenty of room. There's no trend line support ahead of us here. Now, I could do this and say, oh, okay, well, there's $1,100. But per this discipline of the back test that we're doing here, I'm only going to take the 32 ticks, right? Because I said we're going to do a 2-to-1, right? We're risking 200 to make 400. So I'm going to exit right there. Now, could you have let that run? Of course, right? No. This is the trade-off with a manual back test, right? You can see that that's still coming. Was there any reason to get out of it here? Well, you see that line here. This is coming up on 1030. It would be forming the initial balance here, but again, let's keep some discipline in our back test because we don't need to get every inch of that. We're after 32 ticks. Got it in the bank. Okay, let's keep going. All right, now as we come back here, what do we do? Where do we find resistance? Well, one, it's a little faded here because they're on top of each other. But there's a high volume node at the opening range low, where I hit 10 trend line taps of resistance. Now, could you take that? Could you take that as a trade? Of course, right? But note the Gann high low, or the volume weighted moving average here is still trending up. So I'm going to pass on that. Again, we're focused only on the trend line breaks. But for another back test, that might be something you start testing, right? If we're going to hold that trend line here, perhaps when we break the Gann high low here, you might consider the short. But that's not the test that we're doing here. So now I look down here, I got another break. Well, do I have enough room here? Here's the next trend line. If I'm entering here, I got 23 ticks. We need a little more room there. That's not enough room, and it ends up it would have been a loser. So good choice there to identify I don't have enough room. So I'm coming back all the way up to now it's the IB low, right? Look how many times that trend line is defended. Could you trade that? Yes, but we're not going to do that today. All right, for another back test. Where's the next break? That's a hold, right? You see the star is a hold, the triangle is a break. So even though wicks go through, we do not get a close below this trend line. So we come back up. Now here I do get one. Okay, all right. So here I'm breaking this trend line right here. But if I'm entering here, do I have enough room? Well, let's measure it. All right. If I'm going here, I have 42 ticks. Yes, so I do. So let's go ahead and take that trade. That would be a short. So I'm going to assume the worst possible fill. I'm going to get the close of that candle, and we're going to go, where's my 32? There's 32 right there. Okay, all right, so I got my 32 ticks. The market rips back. Now, note we come just a tick from the high volume node, and then we're, right, that's why I encourage you to do those, right? They're very useful. Okay, now we're up here. Anything? Here's one. Is there enough room? No, there's not enough room here because I've got the next trend line right here. Do I have enough room? Here, no. Do I have enough room? No. Do I have enough room? I'm in a squeeze. No. Holds. Here's one. Do I have enough room? Yes. Well, no, we can't take that. We're in a squeeze. More squeeze, right? It's shocking, right? If you don't track it, how much time we spend in a squeeze. Okay, so we're now at the next day trade. I'm at 2509. We've had 7 trades, no losers. Let's go. Here, I won't scroll. Let me get. Okay, moving forward. Here's the start of Thursday. Here's I just want so you see it here. So there's the start on the 23rd. So that's the next day here, and we'll go. Let's get rid of that. Let's go right into. Let's stay with this back test here just to get through it. Okay, so right out of the chute here, you see all the down sloping trend lines here from the overnight. Now, judgment call. You taking that trade? I wouldn't. It's too. Maybe you would, but it's too fat. It's too much potential backwash here in the first couple of minutes. So I would. Rarely would I ever take a trade inside the first 5 minutes, but some would, right? But I'm not going to include that one because I wouldn't take it. I want you to back test this as you would approach it. I wouldn't take that, so I'm not going to include it. Now here, I get pretty good rip here. Now I get a break here. Do I have room? That's the next question, right? Do I have room? I've got the next trend line is up here. I've got 37 ticks, so I do have room. Let's see if I get that without getting stopped out. I may not. Here's the fill at the close, stop down. Okay, so there's our loser. Okay, so we get a loser there, right? It goes, you know, potential, right? You might have taken that on the next attempt here, but let's not assume that you did, right? Let's be ultra conservative here. Here I've got up, nothing, squeeze, squeeze, squeeze. Do I have room here? Here I don't have room, right? I'm right. There's the high volume node. That would be the IB high. I don't have enough room. I'm down sloping trend lines here. There's not enough room, so I'm not going to take that. Here, yes, I do have enough room. Let's check it. All right, from the break, come here, from the break to that, I've got 25. There's probably a scalp there. I'm not going to include it because we're looking for a minimum of 32. So here, assuming you're filled at the close, you wouldn't have enough room. That's the IB or the opening range mid trend line. You know, let's be conservative. Let's not take that one. Here I get one. Now the next trend line is here. Now I can recognize here that I'm coming from a high volume node here to another high volume node here. So I want to see what kind of room I have before I get to that trend line. 22 ticks. I'm going to say no, right? It's not enough, right? There's not enough room to that next trend line here. And by the way, look what happens at the trend line. The market holds. So that's why it's really important. You want to check that you've got enough room. Now, you know, you can do it here with the risk reward and the ruler here, but it's just, you know, the advantages of having our toolbar is right there just for one click away. Okay, now get up here. Now, do I have any reason that I wouldn't take it here? No, I'm coming from a high volume node. I've seen this trend line be tested and hold as resistance. I've got room down to the next high volume node as well as the next trend line. So let's just check it, right, to be consistent. So if I'm entering here, what kind of room do I have? I have 35 ticks. So yes, we're going to take that trade. And I'm going to go with a short here. Let's assume the worst possible fill, the low of that bar. There's my $200 stop. Where's my 32 ticks? I get 35. There's 33, 32. Okay, all right, so I've got it, and look where I bounce. Right at the high volume node. Okay, right here. So here, nothing. Here's the break. Do I have room? Here's the break, right? Now I've got, you know, it looks like I've got plenty of room there, but let's just check it. There's plenty of room. Okay, so I'm going to take that trade right here. I'm going to go with a long. I'm going to assume the worst possible fill. I go into a little squeeze, so this might have been a point of caution. So let's assume you're going to just scratch it there, because you ran into that resistance here. I don't think you had enough. Oh, if I go back, did we get 32? No, you didn't, right? So let's assume a loser there. Okay, we're coming here. What time is it? It gets 3 o'clock here. I'm coming out of the squeeze here. I get a break. It's a little hard to see because I've had so many hold. Here's the break, but it's in the middle of a squeeze, so we're not taking that. Nothing to the end. Okay. Currently, what do my stats look like? Well, I've got a net of 2672 after 3 days of trading. There's been a total of 10 trades. My win rate is 80%. Average win 363, average loser 116, max drawdown 8%, right? So if your goal is 2,500, well, let's assume, I think most of them the goal is 3,000 with a $2,500 drawdown. So you're not there, but you're looking good. Let's go to the next day here. I won't scroll. So okay, here's Friday. All right, we see the massive reaction of the market to the data. So here we come into the open. So right out of the chute here, what's the first thing that happens? It comes down here, it tests those trend lines here. They hold. So up we go. All right, do we have anything to give us an entry here? There's a break. Yeah, there is, right? So here's a break. We are not in a squeeze. We've come up here. Now here's a classic example. Right? Here's the opening range. The 15-minute opening range high, right? You know, retail want to buy that. Do they know that there's a downsloping trend line there that's been tested 9 times? Probably not. Do they know there's a high volume node there? From the weekly split volume profile, maybe not. Let's assume not. Do we get a trade? Well, here's the entry right here. It's not a squeeze until we get to this. But so because it's not a squeeze, we're going to take that trade. So that would I'm going to take my short here. I'm going to assume the worst possible fill is the close of that candle. Here's my $200 stop. Where's my 32 ticks? Where are you? Right there. Okay, all right. So if your target is 3K to in your combine, or however you're trading it here to pass your combine there, well, there's 3,000, so you've done it in 1 week. But let's just keep going. Let's see how the rest of the week would fare. We taking this? No, way too many trend lines down here, right? And your IB low is here, right? So that's not one you would take. There's not enough room. Okay, here's one. I get a break here. Am I in a squeeze? No. Do I have? It's a judgment call because we're coming back to the IB high. It's still version because it's red, right? So that's one to be cautious of. But let's go ahead and take it, just to be consistent with the test. Here's an F12, or that's my entry. So I'm going to take the close of that candle. Do I get my 32? I do not. So let's assume you're going to get stopped. Let's assume the worst case. Let's assume you're getting stopped out after all of that. So there's a loser. Nothing, nothing, nothing. Do I have one here? Nope. Here, hold. Nothing, 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 nothing at the end. Do I get something at the end? Here we are. It's late in the day. Now, do I have enough room here? Right, here's the break. Here's the next trend line. 24. Kind of a judgment call here. All of the conditions here. We've got a downsloping. The Gann high low. The volume weighted moving average here is sloping down here. That's a judgment call, right? Where it's at 345 here. There is room. Let's go ahead and take that. Let's short that. So let's take the close of the candle. Here's my stop way up here. Note it's above that high volume node, so that's good news. I'm coming right here. I've got 19 ticks. Any reason to get out? Look at the cum delta below, right? We're still falling. We ultimately get a little kickback and then we break again. And I come to the next one. Now I see signs of holding here. There's my 32 ticks. You see, I mean, again, you need to do this yourself, right? Or you won't have the conviction in it. Do you see how we go from one trend line to the next trend line to the next trend line, and where do we ultimately find support? The next trend line. And when we bounce, where do we go? The downsloping trend line. So on the week, 33.10. 13 trades. You certainly qualified if you're in a $2,500, or excuse me, in a 50K prop account with a $2,500 drawdown and a 3K target. I mean, maybe the target's higher. Go another week, right? Now you can look at this here. Those of you that stayed with us for 45 minutes, I know this. It's a lot. It's a long video, but if you do the same thing, and it's not hard to do. You can trial our manual back tester here and do the same thing, right? Again, don't be generous to yourself. Be hard on yourself. You know how you react to stress in the market. If the market's going against you, you know how you react. Can you maintain the discipline of just holding that $200 stop? I would encourage you that if you in a $2,500 drawdown, if you take maximum would be 3 losers, right? If you take 3 losers in a row, you're down 600 plus fees, right? You're going to have to stop for that day, right? We didn't really get challenged by any of that just doing this. Again, it's not hard. It's not hard. It's just recognizing, okay, well there were steps here that you may or may not want to take, right? The high volume nodes, I think that's a sweetener to it, right? It just gives me an additional mapping of where the market is likely to find some resistance or some support. It's not a see the line, react. It's an area where I know that the market's going to be thick because of the heavy volume there, and I'm looking for areas where there's distance from one high volume node to the next, like there was here. I mean, the next one's way down here. So from here, should it ultimately head there on the following Monday, you might understand why. So, okay, there you go. I think I've gone long enough here now. That's a lot. I know this is a long video here, but I think it's worthwhile to go through this, and I would, again, encourage you to do the same. You don't have to use the Gann high-low, right? That's just my suggestion, right? What you do want to be very conscious of is when there's a squeeze. So we have several indicators that give you that squeeze indication. You might have one. The key to this, you'll notice here, is that we stayed out of, here's, again, where we're just riding the rail, right? It's so incredibly common. It's expansion and then consolidation as the market digests and tries to establish new value, which is why that's a high volume node. And we ride the rail until it finally breaks, right? Or there's no more interest above, there's no liquidity up here to grab, so they have to come down, grab some liquidity here, and then we ride the rail right to the very end of the day where there's that last sell-off here, which is the advantage of if you stick around to the end of the day, right? That last hour, there's often a good opportunity there. Middle of the day, what are we doing? Riding the rail, right? Just a lot of squeeze. You do not want to trade that. Trust me, I've tried it more times than I care to admit. You can't trade this, right? You're just going to lose money hand over fist, right? It's untradeable. When you see that kind of consistent squeeze when they're going for that long, the move is over, right? Most likely, right? So okay, well, so there's plenty of things for you to work on to backtest here. I would encourage you to do the same thing. There's no way you build conviction without doing this yourself. You have to do it yourself. I'd encourage you to. Well, ES is where I find the best results. If you're insisting on going to the NQ or the MNQ, if you're going to do it on MNQ, I'd suggest 5 lots. It's quite effective on the NQ. That most people are uncomfortable trading the NQ because the very high volatility and the high risk. So ES is where you're going to have your best results. I would encourage you to stay with the ES, and I would stay ES over MES. Right? Again, you've defined your max loss at 200, so it's very manageable. Reminder, this is all done with 1 lots. Okay, there we go. I'm going to wrap it there. The links to these indicators and, of course, the links to the page where you can set up for a trial of any of these indicators. If you don't own the manual backtester, we'll consider trialing it. Run this same test. Go back to a different week. Go back to 3 weeks, 4 weeks, a month. It won't matter. You're going to find the same result. Okay, guys, with that, I wish you good trading, and we'll see you on the next time.